Hey everyone, welcome back to Corporate Decoder. Today, R-Ventures Acquisition Corp just filed an 8K about their IPO, and I'm seeing a huge influx of shares and warrants, and that is the red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about their big public debut, and it tells us exactly how many shares and other exciting things like warrants are now available to the public. Alright, so R-Ventures Acquisition Corp, you might have seen them as REVU, REV, or REVU on the stock market, just made their big splash with an initial public offering, or IPO. This really means they are now a publicly traded company selling shares to regular investors. This particular filing is an 8K, which is basically a report for important events that happen suddenly. The earliest event reported here is the 29th of April 2026. This is when they have made some key agreements and then following up with the actual IPO closing a couple of days later. This is a special kind of company called a Special Purpose Acquisition Company, or SPAC. Think of a SPAC as a shell company that is formed with the sole purpose of raising money through an IPO to acquire or merge with an existing private company. So, R.R.E. Ventures Acquisition Corp was essentially built with the goal of finding another company to buy or merge with. Now, what kind of things are floating around in the market for re-ventures? They have units which are like a bundle deal. Each unit is made up of one Class A ordinary share, that is like a regular share of stock, and then 1/3 of a redeemable warrant. They also have just the Class A ordinary shares themselves, and then the redeemable warrants separately. All of these are listed on the NASDAQ stock market. This first big item in the filing talks about a very important agreement they entered into on the 29th of April 2026 called the Underwriting Agreement. This is the contract with the investment banks, in this case Cohen and Company Capital Markets, who are basically the sales team for their IPO. They agreed to sell a whole bunch of these units, 25 million of them, at $10 per unit. That alone brings in $250 million before fees. The underwriters also have an option for 45 days to buy even more units if they think demand is strong. This is called an Over-Allotment option. They also entered into a bunch of other related agreements around the same time. This includes a warrant agreement which lays out the rules for those warrants we talked about. There is a letter agreement with their sponsor, R.R.E. Sponsor LLC, and their officers and directors, which is pretty standard for companies going public. They also have an investment management trust agreement, which is important because the money raised in the IPO is usually held in trust until the SPAC finds its target company. Then there is a registration rights agreement, which means they are agreeing to register any future shares that certain people might want to sell. And this is where things get really interesting and we start seeing some potential dilution. They have a private placement warrants purchase agreement with their sponsor, R.R.E. Sponsor LLC. Through this, the sponsor bought a whopping 4510000 warrants. Warrants are basically options to buy shares later, and it is not just the sponsor. They also sold private placement warrants to Cohen and also to Clear Street LLC. In total, they sold 7010000 of these private placement warrants. These are typically sold at a lower price to the insiders or partners involved in the deal. So on May 1, 2026, they completed the IPO. They sold those 25 million units, raising that $250 million. But remember those private placement warrants, that is an additional 7 million warrants that are now out there. This section confirms the details on those unregistered sales. It reiterates that they sold 7,010,000 private placement warrants for $1 each, bringing in an extra $7 million. The key here is that these warrants are generally subject to transfer restrictions, meaning the holders can't just immediately sell them, they have to wait. But the crucial part for us investors is that these warrants, when exercised, will bring more shares into existence, which can dilute the value of your existing shares. This part tells us about the leadership. On the 29th of April 2026, a whole bunch of directors were appointed to the board. This is common when a company goes public. We have James Gertler, Bruce Bernstein, Dan Galpin, Kendrick Meek, Brian Daly, and Robert S. Mancini. Some of these folks also got appointed to specific board committees like the Audit Committee and the Compensation Committee. This is all about setting up the governance structure of the newly public company. On the 28th of April 2026, they filed their amended and restated Memorandum and Articles of Association. Think of this as their company's rulebook, now updated to reflect their status as a publicly traded entity. This became effective on the 29th of April, just as things were gearing up for their big IPO. This section is more about announcements. They issued a press release on the 29th of April 2026, announcing the pricing of their IPO, essentially saying how much it would cost. Then, on May 1, 2026, they put out another press release to announce that the IPO had officially closed. These are usually pretty standard communications companies put out to the public. And finally, this is the list of all the documents and agreements that are part of this filing. It includes the Underwriting Agreement, the Amended and Restated Memorandum and Articles of Association, the Warrant Agreement, the Letter Agreement, the Investment Management Trust Agreement, the Registration Rights Agreement, and importantly, all those private placement warrants purchase agreements. Those press releases we just talked about are included as exhibits. And here we have the signature on May 1, 2026, Philip Casson, who is the Chief Executive Officer of R.R.E Ventures Acquisition Corp. Signed off on this report. This confirms that the company is officially acknowledging these events. So looking at this filing, the big picture is that R.R.E Ventures Acquisition Corp has successfully completed its IPO, raising a significant amount of capital. But as with many SPACs, the key thing to watch is the potential for dilution from those private placement warrants. You've got 25 million shares coming from the public offering, but also over 7 million warrants held by insiders that can be exercised to create even more shares. This means that the value of each share could potentially be spread more thinly over time if those warrants are exercised. Historically, SPACs that see a large percentage of their total potential shares come from warrants and sponsor shares have a tougher path to long-term value creation for public shareholders. It is essential to understand that these warrants represent a future supply of shares that could dilute existing shareholders' ownership percentage. The risk here is that the company might not be able to find a high-quality acquisition target quickly enough, or that the market doesn't fully embrace the dilution. However, the company did secure significant funding, which is a strong starting point for their search for an acquisition. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this breakdown helpful, remember to like this video, subscribe for more, and join our community Discord linked in the description.